Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. So it is Monday, second week of 2016, a bit of a volatile day. Friday we came in, they had the jobs report, it was strong, they tried to gun the market, the sellers were able to sell into it, pretty much reject price at resistance 1, bring the market down, and basically make everyone think that it's still weaker, and it still does feel weaker. Today, similar type scenario where markets opened up a bit, sellers were able to sell the open, and then after a few attempted rallies, finally there was one a little bit, swifter, so to speak, into the close. But, I guess, it's not saying much except for we did get a few little red dog reversals, but, it's hard to put excessive risk on here. But same way it's hard to be, big time short considering the oscillator is like minus 84, which is the lowest we've seen in a long time. So anyway, let's just get to some of the charts. You look here. You look at the spiders. At this point, you did get a small little red dog reversal around this pivot. This was your 191.58 that we talked about. Gave you a decent move through. They kind of pinned it into the close. It hasn't caught up yet on price, but that's right around 192, giving more of a doji versus a red dog reversal. I was thinking that if they want to burn off some of the oversold condition, maybe we can get a move back to here. But all I know is I remember, you had this down day to start 2015, and then you had this little, somewhat of a doji, and I was trying to be cute to get a trade into the gap, and then the next day I got a little beat up. So I haven't taken any overnights in a little while, so I did take tonight, and I hope that we don't get slammed tomorrow. We shall see. In the 5 minutes, some guys like, how does this happen? It came out of nowhere. Let's take a quick look. Basically, you had this downtrend here that it was below, pretty much contained by the 21-day this entire time. And then you had your first, POD move back up, okay, to resistance. You had a higher low, which is not saying much, but this is basically, a higher low versus the morning low, and then you could have been a buyer when it went back above 191.56, and then it did go as high as 192.75 for a trade. So not the biggest trade or the best trade, but it's just a trade. Here's your low, higher low, took out some resistance for the first time, reclaimed the 8 and the 21 day here, turned up, so that gave you a little bit of a move into the close, which again, oscillators minus 86, you got to look at certain bars. That's why we do bar by bar analysis. And when you get a igniting bar, sometimes it leads to some shorts covering and a little bit of upside, and we're allowed a little bit of upside. And the problem we talked about with the S&P is that it's not near the lows of the lows of 2015 when many sectors are well through it. So at this point again, here is today's doji. Does this mean it's the bottom? Does this mean we have a rip-roaring rally? I don't know. What it means is, the bulls had a little bit more cajones today to make a little bit of a stand there, and we'll see if we get any kind of move above this to get towards here or here. So tomorrow, depending how we open, I would say this is resistance 1, resistance 2, resistance 3. If the market wanted to, work off the sold condition. But you look at charts and whatnot, and there's definitely a lot of things broken. Some guys made some money as the IBBs went red first, okay, and then extended down, and it actually held for the first time this 285. So if you bought versus the 2015 lows, you made $4 or $5. Okay, it doesn't mean the selling's over, but from when it broke this ascending channel here and went below the moving averages, not a bad spot to perhaps cover a little bit and then see what's next. So at this point, holding here. The IWM is well through it. I guess you could say some guys were looking longer term here at this level, going across, which makes sense. Actually, was that it's below the summer lows, so that's how weak it is, and it's actually even below this pivot. So it's just, I don't know, it's just very, very oversold and well below the 200 days. So you got to be careful. This Russell, the IWM, loves these bear type flags, for continuation, and you got one a few times here. You had actually a few ascending channels that broke. But anyway, this was really the last time, you had some time to get out of the way here. When it went below the 200-day and then broke below this little support trend or whatever you want to call it, and then came in, rallied back up, built this little bear flag, and then boom to the downside. So we'll see what happens here. Not much conviction there. Truly, there wasn't a lot of conviction in a lot of places. I guess some positive signs is maybe Google, Amazon, Facebook, Apple. They all were green pretty much the majority of the day. What the problem was oil was a real headwind, so that's why you couldn't really get a real rally there. You look at Google. You got a bottom tail. I talked about perhaps it, seeing somewhere in this gap, and it came close. And again, if it wants to rally, maybe it could test these moving averages. It came a long way down from this breakout failure. So if you got stopped out here, it's worth a little bit of a try, but it's definitely, not the easiest to hold on to. Some guys bought this Amazon. This actually, looks a little bit better. You have a small red dog reversal here, broke below this. This pivot, came back above it, so maybe, if it wants to bounce up, it could bounce $9, $10, Here was your breakout failure in Amazon. This is a lower pivot. We'll see if it resolves a little bit up. Facebook, was actually a decent short for me early on, and then I did, when the market started rallying, I bought it when it was red, and, not saying a lot here, but this might want to retest this 99-ish area. This was when, you really had your chance to sell it into the end of the year on this close, and now maybe it's worth a little bit of a buy, but it's just, I'm disenchanted, if that's a word. Not much to go on, into this, but we'll see. It's trying to hold this lower area, coming, into support, held this moving average. I wanted to see it at the 200-day, but we shall see. Netflix actually looks like the best out of all of them. They're not letting any stocks break out or have true momentum yet, but this was the first to go up, and if you take that little wick out of the way here, you do have some kind of descending channel here, and it did hold halfway of this big wide range bar. So perhaps tomorrow, if the market's up and they want something that could actually look a little bit better versus just bouncing off lows, this gets above 117, maybe. It actually holds above it for the first time. And then, like I said before, the problem was oil. You look at the USO, another down move here. And every time the oil has tried to rally in almost 2 years, it's just gotten crushed. And this is when the USO broke the 200-day. That is at 37. I tell you about if we break the 8 and the 21-day to get out of the way, let alone break the 200-day and stay below it. You could have even waited for macro support to break here and hover below it, and that was 32. Now we're 9.25. So anyway, you want to just take a quick glance here. This is when it broke this inside wedge to the downside. Tried again, broke below, and now here we are at new lows once again. Not sure what's going to take it to rally, maybe lower prices, maybe something out of the Mideast, but closed on the dead lows, and now tomorrow we'll see what happens with this pivot. This was your last way out right there, but it gave you a little bit of a gap and go through it. This was your engulfing bar telling you that oil is no good, and then here, boom, 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 boom. So we'll see what happens tomorrow. So in closing, I guess a lot of traders have a fear of missing something, including myself. You had a big move to the downside, 6-7%, NASDAQ 10%. Lots of stocks battered and bruised, so it feels like when we rally, we're going to miss something. At this point, we haven't missed anything, and I think better is a little bit of safety. There's been these big ranges, big enough ranges that you can make money intraday without taking excessive risk down here short, because we are so oversold. The same way long, considering that lots of things are broken on many different, mid-term to longer-term metrics. So that's why I feel like the rally isn't, going to be so big, because there's not that many people out there to dupe into coming to buy these levels, and shorts are pretty comfortable. So we'll see what that equals or turns into. So even if we do rally, I feel like everyone's waiting to lay them out. So no one's in a rush right around here. But I guess if prices start to go, maybe we get something to bring down the oscillator. But all in all, not the easiest of tapes. It's very erratic. It's random. Having prep and having patience. Okay, every time, in the past week, I feel like we've had that move through a prior day's low. You've cascaded down. You've been able to buy off the low, add through the prior low for that red dog reversal, get a push up, and make decent money in a lot of names, including the spiders. But if you stay the course and you stay extra and you add there and you think you can get more, you turn that good trade into a bad trade. So just be patient and wait for your A to A plus setups. Don't trade the noise because the noise is just not worth it. Have a great night. I'll see you tomorrow morning.